Scott, good morning to you. So it's pretty wild. It's pretty wild time on the markets, to put it lightly, at the moment, isn't it? It's not really showing any signs of slowing down, with a few crucial markers coming up for investors this week. That's what's behind it.
Yeah, Pete, good morning and welcome back, mate. I can only assume that your return has led to this volatility. I don't want to draw too much of a line between those two, but viewers can make their own decisions. Mate, no, it's been a tough couple of days, tough couple of weeks on the market for many investors. The US market was down more than 4% overnight, our time. The latest number's down just 1.4%, so recovering much of those losses, but it doesn't get much more volatile than that. A massive, massive swing just in a single trading session. And as you say, combinations of everything. You've covered Ukraine this morning. That's in the front of investors' minds. Of course, inflation and interest rates, with the Fed due to meet and release a statement later this week. So there's a lot of things to be uncertain about. Jeremy Grantham, of course, the famed fund manager, came out and said we're in a big bubble and he's expecting a big crash. So if you kind of put all those together in a pot and then talk about things like the ongoing concerns about Omicron and other worries of whether or when the economy will keep growing, it really is a pretty big melting pot of fear in the market right now. I think most of that, probably for long-term investors, is unwarranted. I don't doubt the market will go higher over time and eventually. What happens in the short term, that's anybody's guess, but we probably should brace for more volatility.
Well, doesn't that present buying opportunities for hungry investors who've been here before?
Mate, I think that's exactly right. You asked the perfect question. I think that is it. Now, that's different from saying we know where the bottom is. And so if you're an investor, you don't want to say, well, I'm buying now because it can't go any lower. The market can always go lower, particularly in the short term. But if you like the shares you own a day, a week, a month, 3 months ago, and they're much cheaper now, as long as nothing in the business has changed, if you like the price, then you should like the price now. Now, it's always possible, of course, with some companies, those prices were already overinflated. And so even with these falls, they may not still be cheap enough. So quality still matters, or taking a diversified index approach with an ETF or something is the other way you can do it. But you're absolutely right. If you like those businesses, Woolies is still selling grocery, BHP is digging up as much iron as it can find. CSL is developing drugs, vaccines, blood plasma products. These things continue unabated regardless of what the market does. And that is the key focus, as you rightly point out.
Yeah.
If these businesses are going to be bigger and more profitable in a year, 2 years, 5 years, 10 years, then hey, get the shares while they're on sale. Absolutely.
Okay, well, on that point, you got Zip and Sezzle reported to have resumed merger talks, with BNPL under pressure.
Yeah, I think this is probably in that latter group I talked about. Some shares were, cheap and getting cheaper. Others were overinflated and probably still too expensive. I think last count we had something like 9 or 10 buy now, pay later companies listed on the ASX. And I don't really think anyone realistically would say, you know what, there'll be those 10 existing in their current form in 3 or 5 years' time. The market was just still too saturated. Whenever you get innovation, you get plenty of imitators and copies trying to make their own money, trying to make their own way. And there is, as I said, probably 9 or 10 here. There's a couple in the US, one in Europe, of course. So there's plenty of buy now, pay later options to go around. Afterpay shares fell from $150 when the Square takeover was announced in February last year, and went off the market at about 66 when the Square deal was finally done. The Square shares, of course, will trade on the ASX. But these guys that are left behind are absolutely looking around saying, hey, we're going to have to get bigger. We're going to have to merge. This makes sense. Now, it's only reports for now. Neither company has confirmed these talks have been resumed, but it's very, very likely and, frankly, very smart for the little guys in the market say, you know what, let's try and join forces. Let's try and be one of the 2 or 3 that survive and thrive, rather than one of the more, maybe 4 or 5 that go by the wayside.
Okay, strap yourself in, Scott Phillips. Couple of interesting days ahead. Talk to you soon.
Sure is. Thanks, Pete.